All right, today we're going to talk about something fascinating, a kind of ghost in the machine of the Indian stock market. We're talking about a single, almost invisible player that has become unbelievably powerful. So let's get right into it.
So just to give you a sense of the scale we're dealing with here, look at this number. 1.6 lakh crore rupees. That's the mind-boggling value of trades made by just one firm in 2024 alone. I mean, it's a figure that's hard to even wrap your head around, and believe me, this is just where the story begins.
And check this out, that single firm all on its own was responsible for nearly a quarter of the entire bulk deal value on the stock exchange. And just so we're on the same page, a bulk deal is basically a single transaction for a massive chunk of a company's shares. So think about that. One company doing 24% of the business going up against thousands of other huge players. We're talking giant foreign funds, big-name traders, the whole shebang.
I mean, with that kind of market share, it really begs the question, right? Who is this ghost in the market?
All right, it is time to pull back the curtain. Let's meet the firm that's been quietly and very effectively rewriting the rules of the game.
Okay, so the name of this powerhouse is Graviton Research. They're a Gurgaon-based quantitative trading firm, and yeah, they are the ones behind those unbelievable numbers we just saw.
So, a little bit about them. Graviton was founded back in 2014 by two IIT engineers, Ankit and Nishil Gupta. Now, a really key detail here is that they're a proprietary firm. What that means is they trade with their own money, not client money, and they do it on a scale that is just staggering. In 2024, they made at least 1,900 of these big intraday trades, with the average size of each trade being around 85 crore rupees. Just incredible.
So the big question is, how on earth do they do it? Well, the answer lies in something called high-frequency trading, or HFT. Basically, this is where you use incredibly powerful computers and really complex algorithms to make a massive number of trades at unbelievable speeds. We're talking microseconds. The whole idea is to profit from tiny price differences that you or I would never, ever be able to see.
And that brings us to the real secret sauce, the core of their incredible success, what you might call the billion-dollar algorithm. So their winning formula really boils down to three key steps. First, they zero in on mid and small cap stocks, mostly because those tend to have bigger, sharper price swings. Step two, they unleash advanced AI and algorithms to predict which way those prices are going to move, and they do it with stunning accuracy. And finally, step three, they execute thousands of trades based on those predictions, all in the blink of an eye. And if you're wondering how well that formula works, well, here you go. Graviton has a success rate of over 90% on its big trades. Now, just for a second, compare that to the average retail investor. You know, someone like you or me, who's usually successful maybe 30 to 50% of the time. The difference, the performance gap, it's just massive. Now, this is where it gets really interesting. If you look at the profit from 458 of their largest trades, it's only 24 crore rupees. And that's because the margins, the profit on each individual trade, are razor thin. But then you look at their reported net profit for the year, over 1,000 crore rupees. That tells a completely different story. It strongly suggests that their operations go way beyond just these trades, probably deep into the world of futures and options.
You know, when you have a firm this powerful and this active, it's going to have a huge impact on the market. But as we're about to see, that impact is very much a double-edged sword.
See, on the one hand, there's a definite upside. When Graviton makes these massive trades in smaller stocks, it pumps a lot of liquidity into the market. That makes it easier for everybody else to buy and sell. But there's a downside. Those exact same actions can crank up the volatility like crazy, causing these wild price swings that make trading much riskier and, frankly, more expensive for the average investor.
And here's a stat to back that up. On the days that Graviton was making its big moves, the average stock price moved by 5.1%. Now that is a very significant jump, and it directly ties their activity to that increased market volatility we were just talking about.
Now, when you grow this fast and make this much of an impact, it's pretty much inevitable that you're going to end up on the radar of the regulators.
And that is exactly what happened. You can see it on the timeline here. In September of 2024, the market regulator, SEBI, started looking closely at Graviton and a few other firms. Then, just 1 month later, things escalated. The income tax department actually conducted raids on their offices, so the pressure was definitely building.
So, what was Graviton's response to all of this?
Well, their public stance was very clear and very firm. They stated that they were, and I quote, fully compliant with all applicable rules and regulations.
Okay, so that's the story of Graviton. But what does all of this tale of a secretive, high-speed trading firm, what does it actually mean for the average investor? For you? Let's zoom out and look at the big picture. I think this analogy just sums it up perfectly. Think of high-frequency trading firms like Graviton as Formula One cars, and then think of the rest of the market, especially retail investors, as being in, family sedans. You're all driving on the same stock market highway, but you are absolutely not in the same race, not even close.
So what are the key takeaways here? First, the world of intraday trading is now completely dominated by algorithms and AI. That's the new reality. Second, and this is a tough pill to swallow, those HFT profits, they often come at the direct expense of retail investors. And the data backs this up. In 2024, over 90% of retail trades in the futures and options market ended in a loss. That is a brutal statistic. The bottom line is, the game is fundamentally, completely changed.
And all of this really leaves us with one big, critical question. In a market that's now run by algorithms, is the playing field really still level for everyone? Or has the game been tilted, maybe permanently, in favor of the machines?